Welcome back for another top-notch video. This week, guys, we're going to be looking at the first week of the new year of 2020. My chart is wrong here. 2020 for the year. If you want to know about this channel, we go over the TSP, Roth IRAs, 401ks, brokerage accounts, retirement accounts. Talk all about that in this video for kind of a weekly review. With that, we go over the CSI and F fund if you're in the TSP, and the funds that mimic that if you're 401k or Roth, which is the IVV, VXF, EFA, or AGG. Overall, these funds mimic the S&P 500 for this one, small caps, international markets, and bonds. If that's something that interests you, go ahead and hit that subscribe button. We do videos on a weekly basis. If you want to see our performance for last year, you can check out that video in our description, the link below. Getting right into it, we kind of do a general overview. We go over a couple sites and then do a more technical analysis view on each of the funds. So let's dig right into it. The first thing we want to look at is a chart from TSP Talk. This is a great website. A guy named Tom does some commentary on there. Has our funds for the year. Kind of is a good picture of what funds are doing for the year. So as you can see, for that first week, the F fund is up for the most part, 0.5%, and it is outperforming all of our CS and I funds and our life cycle funds down below. So we're doing very, very well with that F fund or AGG fund. And just to keep you guys on track for the year, we also match that performance. We are sitting at right around that F fund as well. So we're sitting at that 51% as well. So we are outperforming at 51%. We are outperforming all the equity funds so far this year. So we're doing very well this year. Our goal is always to outperform the best fund, right on the tails of that F fund there. So we're doing very, very well for this start of the year. If we could do that for another 51 weeks, that would be incredible. Moving on, as you can see here, we're going to go over some of the just a very general commentary. The S&P 500 C fund does have an open gap here. Could see it come down and try to fill that, but we don't know just yet. We'll have to wait and see. A guy named Tom does this commentary and puts these charts together, by the way. TSP Talk. As far as our PMO line, it is above that red line, the moving average line, so that is good, but I am concerned here with the gap not being filled that this will probably end up getting filled at some point. Usually charts do come back and fill those gaps. It's above all the trend lines as well, so that would be a decent place for the S&P 500 to come back to. At that point, we'd probably end up jumping into the C fund. For the Dow Jones, we are in a trend line here, moving back and forth. We haven't crossed the middle of that trend line. Waiting to see what will happen, see if we can see any resistance around the 1525 line. I might say we might see it just a little earlier, 1520 line here. But overall, we are above our moving averages, and we have a positive moving 200-day track moving average for this chart. Overall, for EFA, we do have an open gap here as well, so just want to be considerate of that. Slopes, moving averages are sloping upwards, which is always great, but just a little concern there with EFA. And then finally, we'll go into AGG, which is what Top Notch is currently invested in. The reason we're invested in bonds to start the year, we just saw some things on a technical chart that you just want to be cautious with in starting the new year. As you guys know, we had a really good rally for that last quarter, October, November, December, coming off the Santa Claus rally as well. So we just want to be cautious as we start this new year. The F fund is, or the AGG, has been performing a lot better based off of last year's performance than the G fund. So we're going to try to minimize the G fund this year, I think, and try to stick with AGG when our equities are not doing so well. The reason we invested in this early September was we kind of saw an upward trend here. Then we stayed invested because we saw it kind of move into these moving averages, and it was forming kind of a bull flag, as you can see, like Tom put up here. Usually with bull flags, the F fund or any fund will tend to break out, which is what we're seeing right here. We wish it would have happened a little bit sooner, but now that it's happening, we're going to ride that out. We're going to see if we hit any resistance up here at the 112 line, and if we do, we might end up moving our funds to equities, and we'll stay ahead of that on top of it for you guys as we move on throughout these weeks. But as of right now, things look really well for that AGG fund. We're just going to continue to watch it as we move on. And like I said, I showed you this chart here with the weekly moving averages of what we had for the week. Here it is on a chart basis. So as you can see, equities did kick off very, very well towards the beginning of the year, and then towards the end of this week, they did drop just a little bit, putting the F fund and Top Notch above all equity funds for the year and beating out most of our funds throughout the year, just a leg in the F fund just a tiny bit, but beating all of our equity funds on the Top Notch channel. Now we're going to move into our technical analysis of all of our funds. Really importantly, the first thing we'd like to look at is IYY. The reason we look at IYY, you say that's a general market fund. Indeed it is. We like to look at IYY because it controls the larger indices. It's all market participants. We like to get the opinion of all market participants, see what they're doing based off their decisions, the market's opinion, and make our moves and decisions based off of that. As you can see with IYY, we are above all our moving averages. We've just moved out of this trend line here. This could act as resistance moving forward. That is a very, very positive sign. We've been in this resistance or this trend line for ever since they drew it, which was back here in May and June, where we saw that take off, and really haven't seen that move above it. So very good positive sign there. Just be careful. We just want to be cautious in case this breaks down. If it does, it could lead to quite a drastic drop back to the 150 line possibly, or 148, something right around there. So just want to be cautious with that. On our charts for IYY on a long-term basis, you can see that IYY with the DO oscillator, the D oscillator, is starting to move down here. As you guys can see here with our derivative oscillator, it is starting to move down. We went from 5.80, now we are seeing this last week, the first week of the year, 5.48. So that is moving down. Usually with negative energy, we start to see price, which is up here, start to drop just a little bit. We saw price drop back here at this one, back in August when we saw that drop. And then when we started to move up positive energy here with the DO oscillator, we saw price start to pick up here and do very well. So we just want to watch this as this continues to drop down here. And then we also, another thing we want to look at is our PPO line, or basically our price percent oscillator, which is above our moving average. We want to see that above the moving average. Typically when it's above the moving average, we see the price move up as well. So good things here with our IYY overall general markets fund, but getting a little cautious here. That's why we invested back in early December in the F fund. We did see it I was very surprised to see this top out and stay top for almost 3 weeks. Jumped the gun a little bit here, guys. Should have gotten the F fund maybe a little bit later, and that kind of yanked our gains out from under our feet for the Top Notch channel in December. But now that this is going down, this is right where we want to be at for where we're sitting with price, and we'll just have to see if this comes down at all. So moving forward, that's the IYY on a long-term basis. On a mid-term basis, as you can see, that PPO line is starting to drop, and we're seeing the DO oscillator start to turn negative or get closer to the negative line as well as we drop kind of down this slope here, as we saw this last time drop down the slope. Doesn't always work with price, but we do see a little bit in here. And then finally on a short-term basis, we can see these charts, really the PPO line is definitely below here, and it continues to stay low. We go from negative 3.88 down to negative 3.91. Oscillator, the PPO line is below the red line, our moving average line. Price is not going to be acting very well while we have these indicators in the red. So just keep that in mind. For IYY, let's move into our general market fund. So IVV, or the C fund, again, looks a lot like our IYY fund. Everything is out and about above our trend lines. Things look very, very nice here. Upward sloping 200-day moving average. Might to see this act as resistance, but if we see this break through this line here, could really see it come down quite a bit. So we just want to be very careful with that. On our technical analysis for IVV, or the C fund, on a weekly scale, you can see we are starting to drop here as well with our derivative oscillator and with our price percentage oscillator. Price percentage oscillator, the blue line is still above that red line there. Price is still positive, moving up in a good direction. Want to be cautious moving forward as we start to see this drop down a little bit. As you can see here, we had this one back in August, drop down. Of course, price dropped down a little bit. That's why we're just cautious a little bit when it comes to the DO oscillator. That oscillator dropped from 5.63 down to 5.28. On a midterm basis with this fund, as you can see, we are getting closer to dropping. And as you get closer to these midterm and short-term basis, that just it doesn't predict the future for longer-term basis, but it's just important to keep in mind that the shorter-term basis can sometimes predict what the longer-term trends will be doing. So we're seeing a drop here as well for IVV on a midterm basis. Price is starting to react a little bit there, and then on a short-term basis, seeing some mixed results in here with our long kangaroo tails for our price, and action just not doing so hot in here at all for IVV. If this were to cross again, when it crosses again, we might try to get in there on a downward, just a tiny, I say correction, just a tiny 2% pullback for the market. So we'll have to wait and see what happens with that. For VXF or the S Fund, we're seeing something very similar. Man, that was quite a rally in October all the way through those months there. Very nice indeed. Now we're starting to see a little consolidation up here from that rally. Going to see if this trend line can hold moving forward on a technical analysis for this fund on a long-term basis. VXF is doing well. This is its second down week. So VXF is small caps typically is a little bit more forward thinking than IVV, the large cap index. So second week of being down. So that's something we just want to keep in mind. The last time we went down here in August, we saw a big price drop. So just keep that in mind. We'd like to kind of capitalize on that gain towards the beginning of the year, stay ahead of our stock fund, so we'll have to wait and see what happens. On a midterm basis, PPO line has dropped below that moving average line, and we are moving down quite a bit here, guys. Price is just kind of bumping along here, not really doing much since the 24th of December. And then on a short-term basis, you can see that the oscillator, both oscillators are in the negative here. This one's starting to come out a little bit, so that's positive sign, but we really like to see the PPO or the price percentage oscillator cross when the long-term chart is in a downward market. So we're kind of waiting for that, for a signal to get into that fund. Moving on to EFA or international markets, keep in mind iFund will be changing its ETF marker. I don't know when that is exactly. I have to look up the date, but when it does, I'll let you guys know, and we'll go from there. This has been a really interesting fund. I'm just surprised since August it's bounced all the way down to the 62% or $62 mark, and since then has really come back very strongly in this chart. As you can see, they're trying to show us kind of like a negative head and shoulders pattern. Like here's the left shoulder here, here's the head, and then a right shoulder here, and then based off of that, when it's our inverse head and shoulders, usually have an explosion of price, which we see here, which is good, but no one can be a predictor of things. I wish we would have jumped in this fund in October. Would have been a really nice ride. Did not do that. Looking on it from a technical perspective for EFA, on a weekly or long-term basis, this chart's been in a downturn for a while now, and even though it's on a downturn with its derivative oscillator, prices continue to move up. So no system is perfect, but it has not moved up a lot. But again, we want to be cautious when we start seeing this move in the opposite direction. Now we're starting to see the PPO line or the price percentage oscillator move down as well. If that were to cross, I could possibly see this fund. I would just not get into this fund right now, honestly. Let it work its way out a little bit, and we'd rather invest when we're in this period here versus this period here. Just less risk for us on the Top Notch channel. And then finally, AGG, the fund that we are currently in for the Top Notch channel, which we're doing pretty well with this new year. We did not do very well in December with it, but for the new year so far, we see that kind of bull flag here, like I showed you on that other chart, large bull flag that started back in September for these guys. They said it was a smaller bull flag that started in December. We saw that a while ago and wanted to capitalize it towards the beginning of the month here when we were above the moving averages. Didn't see much happen here. Stayed with the fund, and it did bottom out on the bottom trend line. Now we're starting to see it break out of that flag, which is what we want to see. Possibly going to stick with the fund for a little while longer, just kind of to see. I mean, it's better than the equity funds right this minute. Looking at it from a technical perspective for AGG or the F fund on a weekly scale, as you can see, since the November 1st, we've been moving out of that with the derivative oscillator, but price really hasn't reflected that very well moving forward, and I think that's mostly due because the PPO line is still below that moving average. Really hoping that will pop out here mid-January, and we could see just capitalize a little bit off the gains on that. We'll have to look towards the shorter term charts to see where this fund is going, but this is where we are currently at with Top Notch, and I think it's just a better place to be at than some of those equity funds that are coming off those highs. On a 2-day basis, as you can see, the PPO line just crossed, so that is awesome. We saw a 2-day chart, basically our midterm chart. Thursday's price percentage oscillator, the derivative oscillator was at a negative 1.24 rate, whereas it was positive on Friday, and we'll still have to wait till Monday for that chart to close that bar. But price is reacting pretty well here. Hoping to see this move up a little bit more in the future. And then on a short-term basis, 4-hour chart, we just had a weekly fake out here. Usually that lasts anywhere from 3 to 6 bars. So we're in our first 2-3 bars of this. So we can see the first half of next week really do pretty well for AGG still before we might consider switching over to the equity funds to gain maybe 1 or 2% on those equity funds for the year as we just kind of transition a little bit of our funds over to that. If you guys have any questions about that, please let me know in the comments below. Those are our equity funds and what our markets are doing for the year. Again, Top Notch is doing pretty well. We're sitting at we're at 0.5% for the year so far for 2020, which is good, which is above all those equity funds right now. So if we can stay above all equity funds for the entire year, that's always our goal. So we're doing very, very well. We just don't want to get caught behind like we did last year. One of the things we did in fourth quarter last year was we were very conservative just based off your yearly history and the year prior, and we ended up missing a decent gain out of that fourth quarter. So this quarter we'll play it a little more aggressive, try to stay ahead of those funds. That way keep you guys interested in the channel as well. Again, Top Notch channel, we go over the retirement accounts and TSP. Please like, subscribe, or share. Really appreciate you guys. Write the comments down below. We're here for another year. That's another Top Notch video. We'll see you guys next time.